This is the Brick and Banter podcast. I'm Ethan Burke, real estate agent with Irongate Realtors. Today I have...
Dona Niswonger with LoanDepot, mortgage loan officer.
Perfect. I've known you for a while. We met at networking groups?
Networking group. Mm-hmm.
Yeah.
Sure was. Several years back.
Yeah. How long ago was it you helped me with the closing? I was at my other brokerage. So it was a couple months at least.
Yes. I was going to say it's probably, a couple months ago.
Yeah, that worked out really well. That was a really smooth one.
Mm-hmm. We like them when they're smooth.
Yeah. So let's start off with the basics. First-time home buyers.
Okay.
So if somebody wants to buy a house, but they don't know where to begin, they don't know what kind of criteria they need, or how much money they have to have, or credit score, or anything. What do you give people advice as far as that goes?
Well, first of all, there's a big myth out there that you have to have 20% down in order to buy a house, and that's totally incorrect. There are programs that allow 3%, 3.5%. There's even some grant programs out there that allow you to get in with grant money so that you really don't even need a down payment. It'll all come in the form of a grant.
Interesting. What are some of the grant programs?
There's Ohio Housing. Some refer to it as OFA. There's also Community First. And then at LoanDepot, we have a product called Access Zero, which is actually an FHA loan, and then the down payment is on a second mortgage.
Interesting.
So that's a way you can get in with zero down. And of course, if you're a veteran, you also have the ability to get zero down.
So you come in with two separate loans?
Mm-hmm.
Okay.
Two loans, and it would be two payments, but that second mortgage payment is very low because it's just based on the down payment.
I've heard with the grants, a lot of the times they get snatched up really quick. There's only so much they can give out. Is that right?
Really, with Ohio Housing, I don't know that they've ever run out of funds. Community First does occasionally, but again, they're typically available.
Nice. And do you guys keep any of your loans in-house, or do you sell them to other people?
We do keep loans in-house. There's always that ability that they will be sold. That's a common practice in the mortgage industry.
First-time home buyers, we have the FHA.
Mm-hmm. We have FHA. Then we also have a 3% down conventional. And those guidelines are just a little bit different than the FHA. On the FHA, it's 3.5% down. Credit scores, FHA is more forgiving with credit scores. There's not an exact number, but they absolutely are geared towards helping people, first-time home buyers that maybe have had a few blips on their credit.
Nice. I know I try to steer people towards the low down payment conventional over the FHA whenever I can, just because you can avoid that little FHA inspection.
Right. The real difference between FHA and conventional is the mortgage insurance. So anytime you put less than 20% down, you have PMI, and that is just a protection that that guarantees that you're going to make your payment. It's like an insurance policy, and it's mandatory. Then on FHA, they have that as well. With FHA, part of it's financed in, and part of it you pay monthly. With FHA, there's specific criteria where it will go away eventually, but for the most part, you're always going to have that on your FHA loan. Where on conventional, if you do that, once you think that you have 20% equity in the property, you can request an appraisal be done, and if it comes out that you do, that mortgage insurance will drop off.
Okay.
Then if not, once you reach 80% of your original loan value, it actually drops off then as well.
Okay. Does that automatically?
Yes.
Okay. With FHA, if you got to that point, you'd have to go in and do a refinance or something?
Well, you can do a refinance to get a lower rate on either program.
Yeah.
But with FHA, it's just there's some different criteria depending on the loan.
Gotcha. Is the PMI the same cost for FHA and...
No.
Okay.
No. PMI on a conventional loan is always monthly. With FHA, there's 3.5% that gets financed. I'm sorry, 1.5% gets financed into the loan amount.
Okay.
And then the remainder goes on. So your monthly payment is a little lower because you're financing that in up front.
Okay. So the cost is about the same, but it feels different because it's financed or not financed?
Right.
Okay. Gotcha. And I've always been curious, who does that money go to? Does it go to the government because it's a government-backed thing?
Federal Housing Administration.
Okay.
It's a fee that they have.
Gotcha.
And then on conventional, it would be Fannie Mae, Freddie Mac, depending on which governing body is overseeing that particular loan.
Yeah, that's always something that I don't think a lot of people realize with the FHA loan is that extra FHA inspection they have to go through. And it's usually the appraiser that comes out and does that, right?
The
It's part
appraiser
of that.
comes out. Really, what they're looking for is more health and safety violations.
Yeah.
So if there's dangling wires or broken windows, maybe a hole in the floor, those kinds of things, very worn flooring that could become a hazard. So they're looking more for those things. If it's something really obvious and definitely a hazard, even on a conventional loan, the appraiser can call for that to be corrected.
That's like a hole in the roof or something.
Right.
Yeah.
Something major and obvious.
Yeah. Makes sense. Yeah, I was curious where the line was for a conventional loan. Like, how dilapidated can it be and it still get approved?
It depends on what it is. If it, all mechanics have to be working in the home. So you have to have furnace and air working, all the electric, plumbing, all of that has to be in good working order. I think really probably for conventional, you're looking more, and each situation's looked at differently, but it's usually something more obvious. You're going to walk in, and as a realtor, you're going to see it and say, this needs to be fixed.
Yeah. What about like flippers? Like if they walk into something and they're willing to fix those giant issues, can they still get a conventional loan?
They can. We have a renovation loan.
Okay.
So with our renovation loan, you can certainly use it for that. You can use it for putting on additions, redoing homes, those types of things. And then on FHA, we also have the 203K.
Okay. I've heard of the 203K. That one, requires a lot of hoops to jump through, right? Because you have to get like
depends.
all of the way I've described it, and tell me if I'm wrong, is you have to get quotes from all the contractors that you want to do the work and kind of use that to come up with the loan amount.
If you're doing a large project, that's correct.
Okay.
You do have to do that. However, there is a easier 203K where, let's say you even just want to put a roof on.
Okay, that makes more sense.
Or
Yeah.
you need, you're going to redo a bathroom and redo the plumbing and add new electric, whatever. That kind of stuff can be financed in.
Okay.
On conventional, luxury items can even be financed in. So if you want that outdoor kitchen, those types of things, you can do that. But FHA doesn't allow it.
Interesting. So you can finance in a hot tub or something.
Possibly.
Comes up to the underwriter.
No, those types of things can be done. Now,
Okay.
You wouldn't do a renovation loan just to do that.
Okay.
Typically, that's done when you do the outdoor kitchen, swimming pool, all of that in one.
Okay, that's interesting. So I never thought about that with the 203K. If you go into a house with somebody with an FHA loan and the roof is bad, you could just potentially finance that in.
What we see happen a lot of times is that there are some things that need to be done and the seller's not willing to do them.
Yeah.
Well, the buyer doesn't have the money to do them. So to flip over and do the easy 203K, that can be done, meet your closing date and time, very easy to do.
That's awesome. And then they do the work after closing, I assume.
Yes.
Yeah. Perfect. Yeah, because that's good. That's always an issue people run into when they get work done by the sellers. Now all of a sudden they have to try to get all of that done before closing, and then sometimes if it's like something that the FHA demands that they take a look at, they have to get all the work done, and then they have to get the person back out there to go look to make sure it's done, and then verify it, and then finish all the paperwork up now that all that's complete and try to get that done before closing.
Right. That can be very, very difficult to do.
Yeah.
And when you get into those larger projects like that on a 203K, there are a lot of restrictions. So everything has to be done to meet FHA standards. Then anything that the buyer additionally wants done, that can possibly be added in as well, just depending on what the item is.
Yeah. If, let's say it's something the FHA will definitely care about, like the roof, and they do that with is it 203K loan? Or
It's a 203K.
they do that with the 203K, does the appraiser ever have to come back out and verify that it was done?
Yes,
Like after closing?
you do have to show that the work's been done. And the contractors will be paid directly from us so that we're sure that they get paid and there's no liens on the property.
Okay, makes sense. Especially if it's part of a loan process, that they want that money held with like a third party so that people can just not refuse to pay people at the end.
Correct.
Nice.
And that protects the buyer too.
Yeah.
So that they don't end up with a lien on their property. And when they go to sell, all of a sudden there's something there and they can't sell.
Yeah. Makes sense. Have you done any of those personally?
I have. Actually, not too long ago, I did a property. It was a barn, very nice barn, and had a gentleman that wanted to turn it into a single family home.
Interesting.
So we did that. It took him quite a while because they were starting from ground up. There was no plumbing, no electric, nothing in there that would speed the process along. So they started from ground up. But it's a beautiful place now.
That's interesting. How does the zoning work on that? Because it was I doubt it was zoned as a single family residence.
It was a
before.
farm,
Yeah.
and part of the land had been broken up.
Okay.
The part of the land that this particular barn was on actually had a house that had fallen down. So, of course, that was part of what had to be done as far as the renovation goes as well,
Gotcha.
just because of safety.
So they like removed that whole thing and then
Yes.
just made the barn the house?
Yes.
Okay. That's cool.
Yes.
That's a clever way to do it.
Yeah. And, each county, each city's going to have some different zoning regulations. This was up in the Sydney area, and that was no problem for that to get changed over.
Nice. I have some friends who work up in Sydney. They have some interesting, I think you have to get the plumbing its own inspection or something.
That I'm not
exactly.
That I'm not aware of. That's not a loan condition.
Okay.
That might be.
It might just be something they do.
Yes.
It's been like 3-4 years since I talked to them about it, but they mentioned something about that. So
And there's a few
exactly.
communities that want you to have an inspection before you can sell. Oakwood's one of those where they'll go out and do either you can choose to have only an exterior or they can do interior and exterior. And again, they're just looking for violations. But that is something that is common in some cities.
Interesting. So let's see. We got the first-time home buyers. So 3% down is pretty much the least they can bring to the table, other than with the
On a conventional loan, 3% down, FHA's 3.5%.
3.5, and then you have programs you can help them borrow that other 3.5.
Yes, correct.
That is cool.
Correct. And then on conventional, and on the grant programs, there are restrictions on that for income. Sometimes there's that, some programs have credit score limits that you can have. So there are some stipulations in that. But if somebody is looking to do that, and even if they're not ready to do it right now, usually you can look at a credit report, look at the situation, and try and help them figure out a way to be able to do that within the next maybe 3 months, 6 months.
That was a good question I was going to ask. The people who come to you and their credit's just not where it needs to be, what kind of advice do you have for them?
Well, first of all, pay all your bills on time. And any collections judgments, those need to be taken care of. Next, I would advise them to look at their credit cards and try and get their credit card balances below 30% of what the credit limit is on that card. Those are things that will help raise your score very quickly.
Does paying it all, like paying the credit cards off to zero, help it? Because I've heard some people say, like, oh, you need to keep a little bit of a balance on it. Some people pay it off. I just pay it off. I don't worry about it.
Right. But the reason that you hear that, that it doesn't always help, you want the credit. You don't want the creditor to close your credit. You never want to close your credit that you've established, and you want to work so that the creditor itself doesn't. Because when an account's closed, you lose all of that history. Not only do you lose that, you also lose just the credit utilization. So if you've got 5 credit cards and you have no balance on those and you've got one with a small balance, well, that tells the underwriting guidelines for all loans, really, that you utilize your credit correctly, that you are managing your credit.
Is there a minimum credit score that works for FHA loans and conventional loans?
There's not a minimum, but once you get down into the 500 range, there is a lot of different guidelines that go along with that. And then depending on what the credit is, if it's collections, judgments, late payments, it really depends on what it is.
Gotcha. So 500 is that cutoff before you really you got to start jumping through hoops.
Right.
Are those the only in-house programs you guys have for first-time home buyers?
Those are the typical ones. We have a new program getting ready to come out, but I do not have any information on that yet. We just know it is a new program, and it is supposed to be out there just to help those first-time home buyers to get into a home.
All right, so we got the first-time home buyers under wraps. They have their house. A few years later, they're looking to sell that, move into a new one. What kind of loan programs we got?
Conventional loans are typically what they would look at the next time if they have enough down payment, if they have enough equity in that property. And we've been seeing that most homeowners have a lot of equity in their property because of the housing shortage. So usually at that point, they'll have enough to put a larger down payment down. And conventional typically will make sense. Sometimes there's situations where it doesn't, but usually it would be a conventional loan.
And do you guys have any kind of like bridge loan programs or anything that makes it more convenient for somebody to use the equity in their current house to get that new one without
Yes.
necessarily having to like sell it
Yes.
and move into an apartment or something?
We are seeing that quite a bit because of the housing shortage. Sellers, they're afraid to put their house on the market because they haven't found anything.
Yeah.
So there is a bridge loan that's available that they can do. It gives them the equity out of their current property up to 80%. That way they have money to put down on the next home. Then when their previous home sells, that loan's paid off.
Nice. I try to push that
smooth,
to people.
Very smooth to do that. It's really a great way. Actually, when the last time that we moved, we utilized the bridge loan.
Nice. Are there any downsides to a bridge loan? Like extra fees or anything?
There are some fees, and it really depends on different banks, different mortgage companies will have different rates, but they're usually very minimal. I would say the majority that I see are probably more in the $1,200 range for the closing cost.
Okay. That's not terrible.
It isn't. It isn't because it has to be recorded, credit report has to be done, title has to be done. So you're just paying for those services.
Yeah. It's so convenient
It is.
compared to
Makes
any
it
of the other ways to do it. Yeah. But for whatever reason, like everybody I talk to who has a house, who wants to buy a new one, they just like refuse to even consider bridge loans. I have no idea why.
Well, I think there's a concept out there, or a belief out there that you're going to have all this big mortgage and your house doesn't sell and all of a sudden you're stuck with 2 mortgages. Well, we know right now the housing industry, that's not the situation. Homes are typically selling very, very quickly. You do not have to have 3 payments because you can, on the bridge loan, you can pay off the current mortgage that they have on their house, give them the equity out, and most programs are interest only, so that keeps that payment very low. You have 12, some programs are 12 months, some are 15 months to get the property sold.
Okay. That's a good amount of time.
It is. It is.
Yeah, if your property's sitting there for more than a month or 2 or 3, it's probably some other issue going on.
Right.
Yeah. There's a guy I went to go talk to who was helping a family member or somebody buy or sell their house, but they were from California. They were really, really unfamiliar with the market. Mm-hmm. And he was interviewing real estate agents, which is fine. So I did my homework. I figured out how much the house was actually worth, which is a good $100,000 less than what he wanted for it. And I go there and I sit down with him and I throw out all the paperwork and I'm like, okay, this is how much your house is worth. This is why. And literally from his porch, you could look out and see another house that was about $100,000 less, bigger and nicer than his. He didn't end up picking me. I think he went with somebody who ended up lying to him, but.
And it probably sold for less than what you told him that the value was.
I didn't look, but it wouldn't surprise me. I mean, people do some strange stuff.
They do. And I think it's common that we all think our house is worth more than it really is. That's those emotional ties that we have to that.
Yeah.
You mentioned helping family out. Gifts
Yes. How do gifts
are
work?
also eligible to be used for down payment. So that's something to consider. What I find a lot of times the kids don't want to ask their parents for money. However, when grandparents, aunts and uncles, brothers, sisters, even their parents find out that they're purchasing a home, many of them will go ahead and want to give them that because they want to see them enjoy it now instead of waiting until later.
And gifts, do they have to be given in a certain way? 'Cause I think it brings up like red flags with the underwriting process if they just have large chunks of money deposited into their account, right?
Correct. Anytime there's a large deposit, it has to be explained and proof has to be shown. So for a gift letter, what we would do is there's a standard gift letter that the buyers and sellers or the family member and the buyer fill out. And then depending on, they can wire the money directly to closing. They can wire it into the buyer's personal account, or they can give them a check. So either way that happens, we have to have proof of that. So we would have proof of the wire, we would have proof of the deposit, proof of the front and back of the check showing that the check actually was cashed and cleared.
Yeah.
One thing that's a stumbling block sometimes is that donor doesn't want to give a copy of their bank statement. And that is something that they have to do so that we can show that it is legal funds. It is up to the mortgage company to prove that all funds are legal. So that's what we have to have that. What I suggest is that instead of giving that then to their family member that's buying the house, just send it directly to the loan officer. And that way, the family's not involved in it. It comes directly to us. No one ever sees it except for us.
That's perfect. It cuts down on the red tape too.
It does.
That's cool. Yeah, the gifts are, I know those are always kind of tricky, but it doesn't sound like it's that bad.
The easiest way is to fill out the gift letter, wire the funds to closing, get a copy of that wire and the bank statement from the seller, or from the donor, from the donor.
Now, hopping back to people selling their house and buying a new one. I just want to see if there's any other options, because it's always a tricky situation because there's just so many different parts. If it's someone who's just selling their house, it's simple. Someone who's just buying a house, pretty simple. Trying to do both of those in the same transaction makes it twice as hard with twice as many timelines that need to be met. So somebody can either sell their house, move somewhere temporarily, and then buy a house and move into there because they need access to those original funds. They can do a bridge loan, which by far sounds like the best option because you don't have to worry about a second place to live. You can take your time. You have like a year or more to move into the new house, get yours sold, take your time to move your stuff over. And then the one that for some reason I always get people wanting to do is list their house and just make everything contingent upon everything. Selling their house contingent upon buying a house contingent upon selling a house. And then all of the time frames have to meet up absolutely perfectly or everything just goes haywire. I'm trying to find more and more ways to talk people into going towards the bridge loan route.
Here's the other thing that I suggest to all of my clients is that when you own a home and you have equity in that home, take out a home equity loan. Now, you have to do that responsibly. You're not going to take it out just to go on vacation, those types of things. But that is a good emergency fund. So if you have enough equity that you can do a home equity loan for $15,000, $25,000, $50,000, whatever it is, having that there is a good emergency fund. You don't have to pay any payments on it. It's sitting right there in the bank, but you only pay on the portion you use. The only cost there are to those usually is 14, 16, 18 months after you start paying $50 a year.
Okay.
So if they already have a home equity loan established, many of those sellers can take the money from there as opposed to doing the bridge loan.
Okay. And
Now,
they can
again,
use
they'll
that
have
money.
3 payments.
Okay. Yeah. But they can use that home equity money to put like a down payment on a new house?
They can.
Okay. Interesting.
Secured funds, so it is allowed.
Nice. And can they do that through LoanDepot?
We do offer that option.
Very cool. Even if the mortgage isn't through you guys? If they ended up going with somebody else?
Right. Even if typically if they already have it established, it will already be with us.
Yeah.
If it's not, then they need to go back to whoever. Well, actually, if they're using it short term, you can't use a home equity. You can't open a home equity to do that. That becomes a bridge loan.
Gotcha.
So that eliminates that.
Neat. How long have you been with Home Depot? Or Loan Depot, sorry. Not Home Depot. That happens a lot, I bet.
That happens a lot. Yeah, especially at first my grandkids kept calling it Home Depot, but they've learned. I've been there probably 6 years now, been in the industry 41 years.
Oh, okay. Nice. Where were you before?
National City Mortgage.
Okay. What made the switch?
Well, National City was bought out by PNC.
Okay.
And things changed very rapidly there as far as processing time, those types of things. So just to change to be able to take care of my clients better.
Nice. Very cool. Is that, you like it more than the one that actually closed down? Or that got bought, sorry?
Absolutely. Well, what you have to understand is that we've changed. The market's changed completely.
Yeah.
When I started doing, mortgages, we had to mail out the employment verification and the bank verification, all those things. So it's keeping up with the times. I love where I am because of the ability that we have. You really don't even have to come in to see me, and you can do a loan start to finish. I prefer to sit down and talk to all of my buyers just to go over several things that other over and beyond just a mortgage, especially those first-time home buyers. But just our ability to do things very quickly. We're able to do automatic employment verifications, which eliminates having to get a lot of the pay stubs, bank statements, pay stubs and W-2s. And then same thing with bank verifications. They can authorize us to pull bank to bank their balances. So we can eliminate a lot of that paperwork. And doing that, we're closing loans a lot faster than anybody else out there.
That's pretty cool. How fast are you typically closing loans?
It depends on the loan. We say that for FHA, 45 days, conventional VA, 30 days. It's very rare we go out that far.
And how did the government shutdown affect your guys' like FHA closing ability? Were things getting delayed?
It did delay some things as a result of not being able to get income tax transcripts. And then sometimes it's the employment verifications, depending on where they are, if we're able to get those.
Is that all sorted now?
It's all done.
Nice. I bet that was a fun time.
Thankfully, it wasn't too terribly long.
And are there any people that say like a typical bank or somebody couldn't help that you guys can help?
Absolutely, because of our renovation loan.
Yeah.
So that's a bonus. Having the FHA with the Access Zero with the additional down payment. Not all lenders are approved to do the grant programs. We offer all of those that are out there available. So there's a lot of reasons why looking at a different lender, if you've been turned down by another one, would make absolute sense to do.
Very cool. Do you have any investment properties?
I used to. We owned a property. We've owned several. My husband's a handyman, so
cool.
We redo and
I
have had some
that.
rentals. Yeah, have some rentals for a while. But the last one that we had got an offer we just couldn't refuse.
Which is like above asking cash, like just crazy.
It wasn't on the market, and we got the phone call, and they definitely paid more than market value.
Nice. And you just had the one?
That was the only one we had at the time. Yeah.
Okay. And you never got another one?
We have not yet.
What turned you off of it? Just didn't want to deal with tenants, or just
No, we weren't planning on selling. We only sold because of the amount of money they were willing to pay.
I mean, like, how come you didn't get any more after that?
Right now, it's difficult to find those, and winter's coming. Just a lot of reasons why. For me, when I do investing, it's just a project that's come along. Something that we're not really out searching all the time, but if that opportunity comes up.
Makes sense. So you're not out there like actively fishing for it, but if it happens to pop up in your lap,
Right.
you just snatch it up.
Yes.
That's cool. So how'd you find that one?
It needed a tremendous amount of work. It was a 2-family. Should have been condemned, but there was a family living in the one side, but it just wasn't selling. It had been on the market for quite a while, and we went in and made the offer. And
how'd you find it? Were you actually looking for that one, or?
It was just from being, it was up for sale.
Okay.
It was up for sale. So it wasn't one that was like an off market or anything.
Was your husband able to do all the work himself?
99% of it. Well, wait. I did a lot of the painting and cleaning, and so I helped out too.
That's cool. What all kind of work did you have to do on it?
It needed everything. It needed new windows, heating and air, new roof, new doors, interior doors, all new kitchens, all new bathrooms.
Fun.
It was a project.
Over the years, have you had any clients that like stick out that were just like really meant a lot? You were able to really help them out of a sticky situation or anything?
There's been several throughout the years. Many times I've worked with buyers that it would take 12 months, 18 months, maybe even as long as 2 months. I'm sorry. Goodness. 18 months, 2 years, 3 years that I've worked with people, just getting them to a point where they can purchase. Those are always so rewarding because, you've got somebody that really does want to buy a house, and they're willing to do whatever needs to be done to do that.
Yeah.
Those are my favorites.
First-time home buyers always get that warm, fuzzy feeling when you help them because I always
Yes.
just get so excited when they finally get that first house.
They do. I have another client, established client, helped him for several years, doing a lot of different projects, a lot of different investing, moving, refinancing, even helped with a commercial property that he purchased. And it's probably been about 5 years ago now, I got a phone call from him. And when I answered, he said, "I'm calling to thank you." And I said, "What did I do?" And he said, "You're not going to believe it, but I retired today. And I was able to do that because of you helping me with all of my investments and my real estate over the last several years."
That's awesome.
Yeah. It was a pretty nice phone call. It's not usual. That's an unusual call that you get.
Yeah, that's good. That's one that sticks with you.
It does. It does.
Now, here's a good question. Are there any people you can't help? Like, I know some people call me up and ask for like a mobile home or something. That's just not something I do.
Right.
Is there any people you have to turn away?
With mobile homes, sometimes, depending on if they're a permanent foundation or not, whether they can be financed. So if they are not, that falls under a car loan, an auto loan. Definitely people who just, several bankruptcies. Those are the types of things that would keep someone from buying a home initially. Have we turned down loans? Absolutely, just because of debt to income, could be something on their credit report, those types of things. But those are rare. Usually when someone can't do a loan at the moment, there's a way that we can fix it and make it happen.
Do you guys do any commercial loans?
We do not.
Okay.
Do not do commercial. We are a mortgage lender. We specialize in housing. And VA loans are also with Wright Patterson Airport.
Right. I almost forgot about VA loans.
Right. With Wright Pat here, we do a lot of VA loans. My company is strongly supports our veterans. We do a lot of seminars throughout the United States, just educating veterans on what their benefits truly are in purchasing a home. There's a lot of misconceptions out there with that as well. We all have additional training on VA loans so that we can help the veterans as much as we possibly can.
That's awesome. And VA loans are great. Like
They are.
they can be up to 0% down, right?
That they are 0% down.
And they're transferable. Is that right?
They are. Now, when they become transferable, there's some rules about that. If you want your eligibility back, it has to be sold to a veteran with eligibility.
Okay. Yeah, that was something I was always curious about. If it could just go out to anybody.
No, it would have to be
go to a veteran with eligibility.
if you want your eligibility back, yes.
Very cool. Are the interest rates typically the same as other loans?
Sometimes those VA rates are a little bit lower. It really just depends on the market. And as we know, the market's been up and down quite a bit lately.
Yep. Yeah, it's hard to predict now.
It is. Everything, all the predictions from the economists that I'm hearing, they're like, next year's going to be a better year. So let's hope that it is.
Very cool. Any other type of loan programs or anything you wanted to touch on, or any stories you wanted to tell?
One thing I will mention is that if you're thinking about buying a house, now is definitely the time to do it. When these interest rates do come down, and they always do eventually, there are so many people out there wanting to sell and buy another house, people sitting on the sidelines wanting, those rates to come down to purchase. The problem is we have a housing shortage. So we are going to be in a situation where when the rates come down, there's going to be a tremendous amount of buyers and very few homes. And when that happens, we know the price of homes go up.
Yep.
So as a result, if you buy now, even with a little bit higher interest rate, you're still going to be ahead, because if you wait until that property goes up in value when everybody else is trying to get it and you're competing with other offers, you end up paying more for it, and your payment can actually end up being more than if you purchased it right now with a little bit higher rate.
Yeah.
And there's always a chance of refinancing down the road.
Yeah. That's something I always tell people, and I don't think a lot of people are really aware of that option when it comes to interest rates. They think, like, I always describe it as there's three potential things that can happen with interest rates. If you buy whatever the rate is right now today and you get locked in for 30 years, it's three things that can possibly happen. It can go up, which, cool, you're locked in right here. It doesn't matter. It stays the same, which, awesome. You just built equity in the house and you didn't go up or down. Or it goes down and then you just refinance at the lower rate and you lock that in. People freak out about interest rates. It's really not that
It
scary.
really isn't. And to change an interest rate from 1/8 to 1/4% difference makes very little difference in your payment.
Yeah. But if you happen to lock in at like 6 or 7% and it drops down to 3 or 4%, just refinance at that lower rate.
Refinance, that's correct.
And then you get that locked in and then you're set.
The other thing is with first-time homebuyers out there, maybe you're on an FHA loan, maybe you had PMI on a conventional loan when you first purchased. Well, because of the value of housing in our area going up as much as it has, you can refinance and maybe drop that PMI, maybe do a lower term. Anytime you can refinance and go to a lower term, it makes sense.
And lower term, you mean the like year amount?
Yes.
Okay.
So to go down to a 25, 20, 15, 10, absolutely. Anytime you're going to do that because you're going to save thousands and thousands of dollars on the interest on the loan.
Over the course of like the lifetime of the loan?
Yes.
Yeah. So here's something I've been telling people, and I want to get your take on it because you're more of an expert when it comes to the loans than me. When it comes to some people saying like, oh, I'd rather get a 15-year over a 30-year. Mm-hmm. I usually tell people go for that 30-year and then just try to do like a double payment, pay it off like it's a 15-year. And that way the payment is lower. If you do run into some kind of financial trouble for a month or two, you can make that lower payment and then go right back to doing what you were doing. What's your opinion on that view of it?
It depends on the buyer. If it's someone that is, really going in and being responsible and you know that they can easily afford the 15-year, by all means, the lowest term you can do is the best option. You can make extra payments at any time on your mortgage. You can pay a full payment, you can do a partial payment, and you can pay extra. What I find is with a lot of people, they don't. That's their intention, but they end up not doing that.
Gotcha.
So if you can do a lower term, I would definitely suggest that.
Are there better rates or anything on the lower terms?
Yes, the shorter the term, the lesser the rate.
Gotcha. That's some good info. Anything else you want to touch on?
I don't think so. I think we covered quite a bit today.
Oh, perfect. Well, if somebody wants to reach out to you for your services, how do they find you?
I'm online, phone. Do you want me to give my phone number?
That's up to you.
Okay.
You can give phone number, email, if you have a website, whatever you feel comfortable with.
Sure. They can reach me at 937-470-8880 or at my name, Dona Niswonger at LoanDepot.com. Reach out anytime.
Absolutely. And again, guys, she does wonderful work. She's helped clients of mine in the past. Reach out to her.
Thanks so much.
Thanks for coming out.
Thank you so much.